You are.
Uh, Thank you. As you well put it, I'm called Joseph Matochi. I do work with FIDE HR currently, whereby uh, also by profession, I'm a HR practitioner in HR space, but I practice HR differently. I don't manage staff at an organization level. I'm at a FIDE HR, whereby we help organizations streamline the HR processes, to make sure that employee enjoy their stay in the organizations, also while they are delivering their skills, and also they derive value from their own skills, as the organization also derive value from the services employee offer. Our host has well put it. In this case, we just want to look at taxes, and also just to mention taxes most of the time usually rises some temperatures. People feel like as if the money, they don't understand why you have to work. And then somebody comes and takes off a better chunk of what you worked for. But as a regulation or as a law, spiritually and also legally, we are obligated to pay a certain portion to the authority, just the way God demands, maybe like a tenth for Christians. Muslims also, they do pay alms. Actually, for them, they provide the books to the sheikh, and then sheikh will actually tell them that based on these books, this is the much you are going to pay. And the same way other religions do pay, the same way also government demand that you should pay a certain percentage of your income tax, which is stipulated in the law, income tax law, chapter 410, if I'm not wrong. That's where now all of us, we are tied to provide a certain percentage of our monthly income. Now, in this case, maybe we shall have saying that the taxman comes from the common people first. So the first people to be taxed are always the poor, and then the others come in. Because for the others who have a better income, they are maximized a term called tax evasion and tax avoidance. So whereby as others to evade tax, which is illegal, and those people with a better income, they use tax avoidance, which is a legal way of evading to pay the taxes in a legal way, whereby they usually structure their own income in a way that now if they present to the authority, it will tell them that indeed, even though probably say your income was 500,000, but the actual taxable income for this case is 300. So meaning a certain figure has not been taxed. While for the common, the entire figure gets taxed. Probably a person earning 40,000, they get taxed the entire 40. They move to the supermarket, they buy, they get taxed again. They move to a different place, they get taxed. So you get a common person, he gets taxed more, while this other group, they get taxed, even though the figure looks higher. And this one's, the figure is lower, but they save a lot in terms of tax through tax compliance and tax avoidance methods. So let me start first by talking about employability. How, as a staff in an organization, how can you maximize your taxes. The first thing is to make sure that your employer uses an accredited way as payroll calculations. Because if probably your employer still uses an Excel to calculate, then another regulation comes in, like maybe the regulation comes in that says we are moving the NSSF bracket up to a maximum of 180,000 to 6%. Then you'll find probably some employers might not be able to comply well. Either way, an employee might lose more in terms of taxes, or in the long run, an employer might declare. As an employer, once you declare, and then during the audit, the taxman will be on your neck. Now, as a staff, once your employer is using the correct tax tool, I always also make sure that at the end of the month, your request for your payslip, that one shows a clear deductions, how they have been done, how much came in as income, your basic pay plus house allowance, which is also legally you should get. For some organizations, they usually discuss the pay in terms of gross. So it depends on how you negotiated your salary. If you negotiated in terms of gross, then what you receive it's inclusive of your house allowance. But the best way while negotiating, then you should be better off. You negotiate that I want to be paid a basic salary of this figure, and also in addition, I get a house allowance. So probably house allowance, most of the companies comes as a percentage. The minimum percentage provided by law, it's 15%. But we have better, good organizations that are stretch that they can tell you that we will pay you a house allowance of up to, say, 25%, 50% of your basic. So if you negotiate in that way, you find that now you have maximized already the income that's coming on your way, compared to where you provide yourself, you negotiate, then you say that if I get paid 30,000, I'm satisfied. So then the employer proceeds to give you what you negotiated. Now, let's say now you've negotiated for that figure. Now, how are you going to maximize to make sure that as the taxman comes in, you have a figure, a better figure that you are going to take home? The first, to ensure that on your payslip, the reliefs have been enabled, whereby we have allowable deductions. We make sure that the allowable deductions, which is the NSSF, including the house levy shift, have been already deducted from the amount to be taxed. So if, for example, your basic is 70,000, we make sure that the amount equal to house levy, shift, and NSSF have not been taxed. So the balance is what gets taxed. So it means that now you have a relief from that amount, which is always referred to as allowable deduction. And then now a tax calculation comes in. So meaning now the figure remains will be taxed based on the prorated tax brackets. Like now the first 24,000 won't be taxed. Then the next bracket, it gets taxed the 10%, moving up to the maximum figure. And then upon tax calculations, on your payslip, you'll always see a figure called tax charge. So that's not a total tax you need to pay. So what you need to pay, a relief must again apply. That now the tax you have been charged, you need to get a personal relief out of it, so that now it brings your tax down. So if, for example, your figure is 25,000, then you need to end up paying zero payee, since already the NSF house levy shift has reduced the figure to below the taxable income. That's always helps you to make sure that now your take home is being enhanced. Also, there's several things that we try to avoid, but always they're necessary. They help you as an employee to maximize your taxes. Let's say you earn a figure that probably when you calculate your taxes, it comes maybe like 25% of the figure have been taxed. You can introduce yourself to like a pension scheme or an insurance policy, whatever works well with you. Let's say if you are paying to a pension scheme an extra of 5% of your income, then the 5% you pay won't be taxed again. It will be termed as a allowable deduction again, reducing your taxable pay, and it will proceed to reduce your tax liability on your payslip. So even though you've saved yourself, the amount you've has been deducted from your payslip as a saving, but again, it's coming in as a saving for your future, and again, it has reduced your taxes. So it gives you again a better margin when it comes to the take home. So your take home increases with a certain margin. The same with the insurance policy. Most of the time, we usually call insurance policies a scam because nature of us Kenyans, we get into a scheme, but we don't push to the end. You get into the scheme, then you didn't understand how it works. You are just probably given the face value of it. You didn't understand how it works. You get deducted month 1, month 2, month 3, 6 months. You say, no, I can't get deducted 5,000 every month and wait for 10 years. You go to insurance, you demand your pay. Then they tell you that, but you are not yet at surrender value. So if you pull out, your money will get lost. Then you say it's the scheme turns into a scam. But if you get into insurance, then with a purpose that will pull all the way to the end, that the 15% of the money you are paying to the insurance comes in as a relief, a tax relief on your pay again. So say you are paying an insurance policy of maybe 5,000, then the 15% of it, the 15% of it will be deducted as a tax relief, which will reduce your net pay, which will increase your net pay, sorry, but reduce your taxes. I've seen a question being posted. If okay, from Nixon, for example, I pay SACCO contributions and insurance premiums. Can they reduce my taxable pay? For the insurance premium, yes, it will reduce the taxable pay. But currently, for the SACCO, the law doesn't provide it to reduce your tax liability. But for the insurance premium, yes, the 15% of the premium will reduce your taxes. Another way of reducing your one way, let me talk for ways that usually increase tax liability, and then that we don't know. Example, you are given a car by employer, even though it feels prestigious that now I've been given a car. I drive myself to work and back home. By law, the value of that car needs to be taxed. So your total gross is 100,000, but now you've been given a car benefit. It's called an uncash benefit. So you are given a car benefit which values to maybe an average of 150,000 per month. Maybe the company values at that point. It depends on how the company will value it. So the figure the company will value that car on a monthly basis, it will be subjected to a tax. So as much as you will enjoy driving home and around, but that one increases your tax liability. So another way of, if you are not ready of reducing your tax liabilities, it's better to tell the employer that currently, instead of giving me a car benefit, which is a liability on an employee, you better give me maybe a transport allowance, which is an asset, because a transport allowance probably, even though the small amount of it will be taxed, but it will increase your take home in the long run compared to being given a car. So it will depend on an individual how you'll have a look at it. So if it adds value to you, you can take a car benefit, which is an uncash benefit. But if the car is not adding any value to you personally, it's just giving you a feeling of the hegemony feeling. So it's better you turn down that car benefit, since the value of it will go, the 35% of the monthly value will go to your taxes as a tax benefit. Also, if you contribute to a pension, then the employer gives you an extra pension that adds up to more than 30,000, and then the excess is taxed. So you need to gauge the value of the pension. If it's above 30,000, then the amount should be of a greater value. But if it's a very small margin that is increasing the liability, you can request the employer to reduce even the pension that so that the total can balance at 30,000, which will be now allowable deduction. But any figure above, let's say the total pension is coming to 45,000, then it means that 15,000 extra will be taxed. So then you need to evaluate the value of the extra amount above the 30,000, if it adds value to you. But if it's so negligible that it's increasing taxable pay and taking much money, you can always tell the employer that now pull this figure to this level here, so that now I can maximize my take home. Finally, I can talk about, in terms of employee, I can talk about non-taxable benefits. Instead of maybe going for something like benefits which are non-cash taxable, you can go for non-taxable benefits, something like medical medical benefits never taxed. So you can request an employer to add a medical benefit on your payslip. The full amount won't be taxed. You can request for maybe say you negotiated for 65,000. You can tell an employer that instead of being 65, let the basic be 50, 5,000, let it be a meal value, because the value of meal up to 5,000 is not taxed. So meaning out of the 65, you have reduced your taxable pay with 5,000. And also you can utilize other non-taxable avenues which are available. Maybe if you incur company expense, then you can request like something like reimbursements, because now reimbursements by law, they take as if they were taxed in other route. already. So it won't be a double taxation. So that's in a nutshell the way as an employee you can reduce the tax liability off your shoulder. There are also other ways that as an employer can reduce. But before I proceed, let me welcome our host. Maybe if there's any question before we proceed again. Thank you. You're welcome, Mr. Jairus. So that
Hello. Hi, Joseph.
hi.
We have Nixon who is asking that if, for example, I pay SACCO contributions and insurance premiums, can they reduce my taxable value?
For insurance premiums, yes. Insurance premiums by law, it says that the 15% of the amount is termed as a tax relief. So if you are paying an insurance policy of say 10,000, then the 15% of the 10,000 will be a relief of your taxes as an insurance policy relief. But for the SACCO contribution, currently there's no framework that it's used to have to give a relief to the employee. Because I think for them, they deem that you'll earn a dividend at the end of the month. So for that one, there's no framework that it should reduce your tax liability. But it's always a good saving scheme because you earn dividends out of it as other than other benefit that comes from the SACCO.
Yeah, I think we can proceed. That was the only question that was in the chat section.
Okay, thank you. And then I don't know how many minutes I have.
We can do 15, 20.
Okay, then in the remaining time, maybe we can talk. I can have I can take the 15 minutes to talk about what about maybe a person will ask, I want to move in as an employer. Probably we all of us dream that we will scale up our value from being an employee to an employer to a consultant, also maybe to whichever career path you decide to take in future. So as an employer, you can also maximize some ways so that you reduce off also the tax burden off your shoulder. Instead of now being taxed the entire figure, you can also always make good use of the available mechanism to reduce the cost of your shoulder. For example, as an employer, a business person, you must always make sure that you are putting your books in order. That will save you much instead of just spending here and there. Always put your books in order and always differentiate your personal money from the business money so that now you'll understand when you're spending the business money and when you're spending your individual personal money. So that now when it, because if you add, you lump your personal money to a business money, it will come and be, KRA will see it as a total income that you need to declare, while the other one did not maybe arrive from the business proceeds, or it's something that maybe, yes, you are payment of the business. So separate the two, and always have the timeline when you are separating the business money and the personal money. Most probably, one of the ways is that you, as a business person, always number one, earn a salary from your business. Just as you have the staff or are your employees, you are also an employee of yourself, of your business. That is, your business employs you. So your business need to pay you at the end of the month. So whatever you earn from that business should be separated from the entire capital of your business. And then lastly, now from what you have as a business person, the figure always deduct all the business expenses. Have a proper bookkeeping that you have to track all your expenses, the allowable expenses from your business. That now, this is my rent, this is my salaries that I paid to my staff, this is the utilities I last. Maybe you have professional fee, like we have JCVs who offer professional services. Maybe you booked for a professional session. Always have all those expenses aligned together, so that now at the end of the day, you will deduct from now the total from the total sales. You will deduct your business expenses. Also, another thing, you have to optimize your staff structure. Number one, you have to make sure that every staff in your business, number one, they're giving value. There's a value calculation. If you calculate at the end of the month from the human resource, you need to see that you've optimized the value you are getting from the staff. Now, after getting that value, then again, you optimize the tax compliance. So you make sure that number one, be tax compliant as a company, because once you start tax evasions, then once that the time for paying of penalties comes, penalties will come in probably with a very high figure, whereby probably your payee could have been say, could have been say 200,000, and then with the penalties, you will find yourself paying all the way for a seven-figure amount. So it's always good to be compliant. Make sure that as a business person, you are compliant with the statutory obligations of the business, so that now also those statutory obligations will help you now to reduce your tax liabilities, because what you pay as what you declare as a payee will be reduced from what you're going to declare in other tax obligations. And then also make good use of trainings, because any amount you pay as trainings, they are termed as an investment to the company. So the taxman cannot take that figure off your pocket, because it's a value addition you give to your business, and always termed as a liability. So being a liability, then it will save you a lot from that tax liabilities. And then also another point, as a business, you'll have some capital assets, which we call fixed capital, like cars. Maybe you have a land, and then you have maybe something else. Instead of now, maybe you buy today a car, then you say that this car, I'll be using it in a business. I have purchased this car at 2.5 million. Now, instead of declaring your car that I bought this car at 2.5 million, then pay taxes for that car, it's better you stretch, because today, if you declare, pay the declaration of 2.5 million, next month it will have depreciated. Next year it will have depreciated again. So it's better you declare on a monthly basis based on now the valuation of that capital you have. If it's a car or the machinery, you can have a valuer that now will do the valuation of what's the value of this car market rate now. Then you will find yourself paying less compared to when you declared the actual market value when it was off the market. And then so you can always stretch those other capital allowances instead of paying at once. Then it comes, you end up paying higher, but now going forward it starts to depreciate, whereby now you could have made good use of the depreciation to declare less. And then finally, let's check the time. I can talk about other incentives. As a business, identify which incentives is given to your line of business. Like maybe you are youth in business. What incentives have been given to the youth? What incentives have been given to women or people with a special who are enabled differently? So always identify the government incentives given to your line of business or to your group of to your group at that state, so that now you can take advantage. Maybe they are saying in this maybe zone we are not going to tax up to this point, so we'll start maybe taxing at a certain value. So always make good use of the government incentives being given at that time. And then finally, also as a last point, always also make good use of the available, which point I wanted to say, something, and then I ending up losing it. Also, other than the incentives, yeah, I've remembered, make good use of the VAT. Value added tax that you give should always be deducted from the amount you are going to tax. So in this case, to maximize this, always get the service of a person who will understand how to optimize the available avenues before now declaring the actual amount. Have a person who will understand how to optimize the value added tax. Are you in the bracket to pay the corporate tax? Are you in the bracket to pay the VAT or not? So that that person will help you, guide you in your walkthrough, so that you will pay the government what's due, not an extra. Thank you. I can see there are a lot of questions in the comment section. Maybe I can take it to the host so that we tackle the questions.
Yes. Thank you so much, Joseph, for that insightful presentation. We have several questions in the chat section. I'll start with Val, who says that, if, for example, is it true that while filing annual returns and you get a value that means KRA owes you because you were overtaxed? That amount is only redeemable by reducing your VAT when you have a company. What do you advise on this?
It works in a two way. Number one, while making your annual returns, if you file wrongly, you might end up owing the taxman money. So once you file, always check what's the excess figure saying. Is it a positive figure or a negative figure? If it shows you a positive figure, you owe the taxman money. It means two things. Number one, while you are making your filing your returns, you have not declared correctly. Probably you've not made use of the reliefs, the personal relief, maybe the pension or whatever, that now needs to bring down the actual amount you filed. So if it's a positive, you owe the taxman money, and it's a negative, it's true, the taxman owes you money, and there's always a tax refund on the, if you log in to your iTax, there's always a place for refund where they'll ask you to select which year is that. You put your company, your bank details, and then they say that they do a reimbursement within 90 days, but it can go beyond. But in the long run, they do pay, yes. If you have a negative figure, you'll have a refund that a taxman will refund back to you. It's true.
Yes. Thank you for that. Another question is that some employers avoid paying commission and other allowances using M-Pesa, citing compliance issues, and we are forced to go by what we are told.
Yes, as some things like commission, because now currently the taxmen are a bit ruthless, and they expect the employer to declare everything. So if they're declaring that they paid commission to the staff, they will expect that the employer will be expected to declare the commissions, so that now the commission, because the commission is taxable, even though the commission won't be taxed other statutories like NSSF, house levy, and SHIF, but the commission should be taxed payee. So, but how some employers do, they end up paying you less what will be remitted to the taxman. So if maybe your commission is 50,000, they will give you maybe, for example, that 5,000, then the extra will come on your payslip, so that now after taxes, after being taxed payee, then the excess amount will come as your net pay. So you can still be paid via M-Pesa, but now the figure need to be declared on your payroll. So due to ruthless nature of the taxman, yes, employers tend to avoid that to be compliant. So to avoid extra penalties from the taxman. Thank you.
Thank you. So for the meal allowance to be non-taxable, should it be 5K weekly or monthly?
It should be 5,000 monthly.
Thank you for that.
It's a maximum of 5,000 monthly. The excess will be taxed.
Sawa. If my former employer failed to remit my taxes, can I file nil taxes for that period of time?
If you are a former employer, there are two scenarios here. One, your former employer might have filed the return, but they didn't remit. So still KRA shows that on your ledger, there's some amount need to be remitted. So you at that point, it's not so prudent to file nil returns. You see, like this year, we have people that have been receiving messages from KRA that you didn't declare this figure of your income. So it's better to go back to that employer, make sure that whatever that was deducted is being remitted. Or alternative two, it's even better to give you, so that when you are declaring that amount, because now the KRA will come for you, they expect you to declare that. So it's better to get a clearance from the employer, and always before you file, get your P9 form, because now the P9 form will guide you of what you are declaring. So initially, it was easy to declare nil return. It was very easy. It was working. But currently, KRA might come and send you a message that you declared a nil return, but we can see there was an income tax on your payee. So it's I cannot really advise that you do a nil return for that case.
Thank you so much for that. As a small scale farmer, how can I deal with the issues of e-teams? Most of course is on farm inputs and labor.
Currently, to deal with the e-teams, the best way is as a small scale farmer, get your services from then this one's also coming to hit hard on the business that are non-compliant. So it means that now you have to engage business that are compliant, so that also they will give you, the other one will give you in the e-team. So you can utilize the e-team services. Number one, you can go to your e-citizen. On that e-citizen, you can generate what we call a reverse invoicing. So you can invoice even to a person who is not on e-team. So you can make use of reverse invoicing, so that now you use that option to utilize. Another way, currently businesses are trying to avoid people without e-team compliance. Like now you can see the normal border are currently a bit suffering since most people probably are going to ending up registering for example Bolt corporate, that even though I need maybe a border, it's better I go request a Bolt rider, and then I'll request for an e-team. So you can make use of those who are already registered, or you can make use of reverse invoicing. Thank you.
Thank you so much for that. Jane is asking for your contact. You can share your contact in the chat section. I think there are no more questions in the chat section. That tells me that people are satisfied with the information that you've shared. If there are not any questions, anyone with a question, you can unmute and ask. If not, we can hand the program back to Skylar.
Great. Thank you. I feel like, thank you, Joseph. You shared your number. So if you're having these queries, if